All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market has about 90 minutes left in it here. Today, we have seen the Dow turn positive. The Dow Jones, we've also seen the SPY turn positive. Small caps have turned positive. It's one where it's not massive participation, but decent participation there. And, fairly interesting given the concept of, or given what we saw with S&P futures overnight. And so let's go out and take a quick look here at it. Bear with me for just my apologies for just about 15 seconds. I will be right back. Alrighty, there we go. So we have one position on the board for the challenge, and that's Disney. Got knocked out of Starbucks this morning as it broke our stop level here, and Starbucks, it's about where it was when we got knocked out of it. It's the same concept as Disney Chart and several of the others. A lot of these stocks that kind of led the way or didn't get hit as hard on Friday. They've gotten hit a little bit harder here today. Disney's at 145.33. Our stop level for Disney is 145.20. So we're barely above the stop. I know we've spent most of the day below that stop, but it has rebounded back. I am going to hold that going into the close. Now, as far as new signals, there are no new signals on the board. The bullish crossovers, it's a blank list, so nothing there. The bearish crossover, there are quite a few, but you'll notice this list has been halved from what it was this morning. I thought CSX had a chance to trigger, but it hasn't. Micron, I thought, had a chance, but it hasn't. So just no bearish triggers. And it's not because the algorithm's too tight or anything like that. I think it has a lot to do with the fact that, the probability of seeing strong downside to these is fairly minimal, but is nice to see some of the downside crossover action because things like Home Depot, let's just say it were to hold up right here and get an upside crossover, we're probably looking at a bullish signal coming into it. So we'll see kind of how those transpire here in the next 24 to 48 hours. With those downside crossovers. All right. I was asked this morning my thoughts on the challenge so far starting, and I responded back and I said, I don't know that I can have many thoughts on it, but I'll summarize them in as few words as possible when I jump on video. So here we go. My thoughts on the challenge so far. A kick in the teeth, right? It feels like a kick in the teeth. Get into positions that are good positions that have great technicals associated with them, high probabilities in them, and then a missile flies, and boom, right? But at the same time, that's trading. Right? That's trading. That's not something I can, put my head down and go, oh. No, that's trading, right? And we fight back, and we go with what we go with, and part of having a system in play is to deal with things like this. And we know these types of things happen, and we know we're not going to deal with them perfectly, but having some sort of quality risk reward system in place, okay, what your damage is, should it go against you, and all right, you're still in the game to fight back, and that's where the challenge is. Still plenty in the game to fight back. I'm not doing anything special or fancy or unusual here with it, because I feel a certain way or anything like that. But the reality is, anytime a trade, you close out a trade like a Starbucks, feels like a kick in the teeth. Well, that's trading, right? That's if you don't like that feeling, you can't trade, right? Because every trader deals with it, and we just expect that we have some of the highs come in more than the kick in the teeth. And so in terms of summarizing, it's very early. And great, continue to run with the process. We'll continue to go with the process day in and day out, and ultimately, I do expect this challenge to be quite successful. So, that's my thoughts. As probably as little words as I can put it in. Now, the market. When it comes to the market vibe and everything, the market vibe is still bullish, and I'm kind of surprised at that. But if we take a look at the bullish percent index, notice that throughout all of this, the bullish percent index hasn't budged. What does that mean? Well, that means that we do not see stocks on a point and figure chart basis, which tends to be a pretty good medium term signal. We do not see them turning bearish. We still have 78% of the stocks that are bullish, and they're not turning bearish, right? So this is holding up extremely well for what we've seen happen in the market. And that's one of the reasons why we're not seeing, the market vibe turn bearish. Another reason that we haven't seen the market vibe turn bearish throughout all of this is just the number of stocks trading above the 7 and 20-day moving average. I mean, we still have 44% of the stocks above the 7-day moving average. Yeah, that's a lower number, right? But, we haven't seen that shot down that we normally will see into the 80 or 90 area here on that. And then if we look at number of stocks above or below the 20-day moving average, you'll notice that this is 62%, right? 62% of the S&P is above their 20-day moving average, which is a pretty bullish position there. So, we have not seen the metric shift in a major way. When we look at performances of IWM relative to the SPY, we're not talking about some sort of massive bearish lag. They're with them. So, we're not seeing that here, and it doesn't mean it can't happen, right? But when it comes to the market vibe and it comes to the market metrics, right, it's not about what's going to happen, right? What is the environment right here, right now? Well, the metrics are still showing that the bulls are in control. And, that is something that is probably surprising to some. I know I was a little bit surprised when I kind of looked at it all, but, at the same time, when I go out and look at what's going on out there, I can't be, overly surprised. It is very bullish to see some strength coming into tech today. We saw the Qs perform early. They were one of the first areas to go green as Facebook and Google, punched into some new short-term highs. So it's not like we are seeing, a lot of new lows being created here. In fact, today we still have more highs than lows being created. So it's still, from an environment standpoint, it is still a very, it's still a bullish metric, that is out there. Now we have seen some short-term weakening of some of the technicals with a lot of individual stocks, but not to the point of all-out grizzly bearish type of action there. And let's face it, the market is dealing with a couple things. One is the economic data that we have seen of late, which has kind of been right? And we talked about it last week. It's in that yeah but scenario, right? This is the last month where the market is going to be able to get away with that yeah but. The data is bad, but that was because of China-U.S. tariffs. This is probably the last month we'll be able to get away with that. And then we've had the headline uncertainty from the missile action, and the war of words that is happening right now between Iran and the U.S. And that obviously could escalate. But I kind of shared my thoughts on it this morning with the analogy, the football analogy, and I'll repeat that here. But this season, this NFL season, football. There are two teams that just don't like each other, the Cleveland Browns and the Pittsburgh Steelers, right? They're known to not like each other. And then the first game this season that they had, as the quarterback was being tackled, he grabbed the lineman's, helmet there, and it infuriated the lineman, and the lineman ripped the QB's helmet off and hit him with it, right? There were shots fired. Bad blood, shots fired, a lot of outpouring of emotion on the field. There's some saying, hey, slow down, slow down. Others, getting all riled up. And, there was a shot fired. Last week, U.S. fired a shot. Was a shot fired in December by Iran? Yes, but, we have shots fired and tensions very high. But since then, it has been words, right? It has been words, lots of words back and forth, in the same way as in that football game, lots of words back and forth. But, cooler heads prevailed. No more shots were fired. Second game of the year, cooler heads prevailed. No new shots fired, even though the words were still going back and forth, and even though the teams didn't like each other. It probably never will. And, right now, that's, where the situation is at. And, where I kind of expect it will be. But, I do have to accept the risk factor that, new shots could be fired. If new shots are fired, that is a little bit game-changing, right? Just like in that game, had more fisticuffs, happen, more punching, more of a melee. We could have seen further action, be taken by the officials and by the league when it came down, to that incident. And so, as far as the severity of the incident, right, one is life or death, the other is a game. I understand there's a big difference there. But in terms of just that kind of, heightened emotion and outpouring of words, this feels very similar to that. And, a lot of times in these scenarios, you will see it simmer down for a while, flare back up, simmer down, flare back up. And, right now we're in a high flare period. And let's face it, we've seen it before to a lesser degree. Obviously, this one's a little more elevated. But it's not going to go away. It's going to be something that will exist with the markets for years to come, U.S.-Iranian relationships. It isn't going away. But it's also not a global economic game changer. If this were the U.S. and China, it would be a global economic game changer. It's the U.S. and Iran. It's, there's not that same element associated there. All right. So going into the close, holding Disney here, and we'll take a look at it in the morning. Hopefully get a nice little kind of hold up today, little gap up tomorrow to say, okay, it's off and rolling, but we'll manage it accordingly and run with what is. And we have plenty of cash here to to get aggressive with the next position. Thanks for hopping on. Have yourselves a great one, and we'll talk to you tomorrow. Take care.